Hi, everyone. Welcome to our market update. My name is Vinnie, and this guy.
Hello, everybody. Happy Friday. I'm Robert Landez with Caliber Home Loans.
You know what? He might not be smiling now, but don't worry. By the end of it, we're gonna give him the smile. There's a smile. Thank you, Robert.
That's for you.
How are rates looking this week?
Well, I'm actually glad to be on this call because I have some really surprising news for everybody. Rates are on the rise.
Oh, fantastic.
Actually, not surprising at all if you've been paying attention to your mortgage advisor in the past 6 months. So that should not be surprising for anybody. We continue the expected rise of mortgage rates, landing at the close today of a national average of 3.92% on a 30-year fixed mortgage. So that's up from 3.69 last week. The rate also lands us at the highest that mortgage rates have been since May of 2019. So again, not a surprise. This is kind of what we've all been expecting for a while. Major driving factors behind these rate increases, guys, is going to be, first of all, inflation. Everybody can feel it. You go to the gas pump, you feel it. And nothing demonstrates inflation quite like these guys right here, okay? I just paid $5. These used to be 23 cents a dozen back in the day. I just looked that up.
23 cents? Dude, how old are you? Come on.
You know, good old Google.
Come on.
No, but again, inflation is a major factor. Also, consumer spending kind of being higher, than we anticipated. But next week, actually, the Feds are meeting. They're going to be reviewing a lot of major marketing factors. One of them being the PCE, which is their favorite in gauging the market. It's kind of a mix of consumer spending, and with that, there's an anticipation for rates to continue to rise. So we were talking, I think, back in January, and I anticipated rates would be in the 4% by March, and we're right on track to have that. So,
well, you know what? I'm not Debbie Downer, as Robert might be. So I'm going to give you some somewhat good news. Inventory is slowly trickling up a little bit. Now, with all the good news, you got to get some bad news. The median home price for a detached home last month did trickle up a little bit. We're a little under 900,000. Yet in the attached market, it kind of balanced out and has been kind of steady. So we'll see what happens this month. I mean, my guess is we'll probably get this about similar of what we're getting. It's going to be a little while for rates to trickle up and to see the effects of that in the market with inventory going up. But we're slowly, I think, seeing that right now. So last week we had this question because I know everyone likes question time. I know we all like question time. Yes. Did you say what the F?
I said cool graphic.
Oh, thank you. There you go. All right. So last week, okay, how much of the most expensive detached properties sell in North Park so far this year? What's your guess, Robert?
I'd say between 1.25 and 1.5 million.
All right. Well, it was a little under 2.
Wow.
Yeah. So, yeah, if you were looking to buy North Park and you bought something at Robert's price, 1.25 around there, 1.5. You got a steal relative to that property. Now, if you want your chance to win $50, you can try and answer this question. So, how much did the least expensive detached property sell in La Jolla so far this year? Least expensive. That's kind of the most affordable detached property sell in La Jolla so far this year. You have any guesses, Robert?
Jeez, I'd say maybe $1 million.
$1 million? All right. Well, that's Robert's guess. What's your guess? Text below myself or Robert for your chance to win $50. Now, going back to the North Park property, I'm going to give you kind of some information of what we saw this year compared to last year. Let me take right there. Take that down. All right. So you can see for in North Park, inventory last year to this year has gone down. values, and there's not much to really choose from, have gone up. You're talking about on average, I mean, on the median, about a little over $1 million. So Robert's guess of a million and a quarter, million and a half, seems fair. And then the attached market has gone up about 20% in that same area. Now, the 92104 can be kind of tricky. I mean, Robert's pretty familiar with it. You have 92104, you have a little bit of City Heights in that kind of ballpark. So things to kind of to think about when you're kind of factoring the numbers. Really know the different streets in that area. Any other insight? Any other thoughts that you've been seeing in the last like week or two, Robert?
Yeah, so we're kind of getting into that rate shopping environment again that we as lenders all love. That's how we love to spend our days. No, but we've been getting a lot of calls, definitely people that are kind of getting down to the wire. And one thing that I've observed out there right now is a lot of big name lenders. I'm talking about the big names you could think of mortgage wise. They're reeling borrowers in with what I call teaser rates. I mean, they're going to fight tooth and nail to keep that 3% and some change on your screen just because they know that that's what consumers are used to seeing. My advice to you as borrowers, if you're thinking about refinancing, if you're thinking about buying, is read between the lines. Just out of 4 out of the 5 lenders that I saw within the last week that I was able to do a comparison on or against, they had a lot of hidden fees. So obviously we all want those 3% interest rates, but what you need to pay attention to as a borrower is you need to pay attention to the points that you're paying for that rate. In one case, I saw as much as a $12,000 fee to get like a 4.25% rate. And you also need to pay attention to the APR, the annual percentage rate. And APR is going to show you an expression of the total cost that you're paying into the loan compared to your actual interest rate. So just one thing I really want people to be mindful of, because people usually are very rate driven. They're going to, jump toward that attractive interest rate. And usually what the lender is counting on is that you've already applied, you're in too deep. By the time you realize the points and the costs, you're just going to say, what the heck? So if you have a good rate, it seems too good to be true, definitely. I'm willing to do a free side-by-side comparison, no obligation, cross qualification for you to make sure that you're getting the best deal.
And something to really think about is you don't lock in the rate for the most part. I mean, 99% of the time until you're actually under contract. Or if you're refinancing, I mean, it's a little bit easier to verify and shop it while you're refinancing. And there's a lot of moving parts when you're purchasing a property, but you don't lock in that rate until you're actually in escrow. So the market fluctuates, right? So talking to your lender and knowing when the best time to lock in that rate is going to be is crucial. So talk to them. And even though you maybe don't have your property right now, talk to them. Go, hypothetically, if I was to get into a contract today, we were going to lock in a rate, what would I look like? What would things look like? And then talk to Robert, get a second opinion. But it can be a little bit tricky because the ability, you can't say, oh, well, I talked to this person, I talked to that person. I took this person 2 months ago and they were quoting me this. The market's changed, things have changed. So really try to talk to them around a similar time window so you're getting the best value.
Definitely. And another point to bring up is especially those that are kind of like on the fence about refinancing, whether or not it's worth it. A refinance, like, even though it seems like lately all we've been delivering is grim news about the interest rates, right? But the point is that we're giving you an idea of the direction of things. So with that said, if you know that you have to refinance, you need to tap into some cash, some equity, of the rising home values. If you have the benefit of being a homeowner, know that if you apply, you can get a pre-approval the same day and lock in a rate for 30 days. So the rates that I'm telling you that are in 2 weeks are going to likely be in the low 4%. You could hypothetically still lock in a high 3% today for 30 days.
And I mean, if you're looking to refi, if you're looking to take out money, if you're looking to get a bigger property, upsizing, downsizing, whatever it might be, things change so rapidly, right? That you don't know what you don't know. We do this stuff on a daily basis and we have to keep up to date what's happening, right? So find a trusted resource, talk to them, tell them what your goals are, and allow them to give you options to what's possible. Thank you guys for watching. Please reach out with any sort of questions you might have.
Thank you.
Bye,
Have a
everyone.
good weekend. Bye, Vinnie.